Good morning, traders. It's 8:03 a.m. Chicago time on Thursday, the 8th of February, 2024. Thanks for joining me this morning. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So, this is episode number 2620. Here's what we've got this morning. A quick reminder that the pre-market summary sheet is going to be discontinued. The overall posture this morning is mixed. Europe popping higher. Pretty good earnings from there. Unilever. And AstraZeneca come in line. Alibaba, though, disappoints. McKesson and PayPal showed strong earnings yesterday. Disney also beat $1.22 to 99 cents. Chinese CPI comes in weak. Comes in weaker, so that's good. PPI in line. And then President Xi came out and said that he's promising to enhance support for the economy. So the APAC exchanges, given how we did yesterday in the U.S., the strong finish yesterday and this promise, it's caused the APAC exchanges to trade higher today. Fed's Barkin came in and said that the economic data is remarkable, quote unquote, but is cautious on the accuracy of numbers at the turn of the year. Kind of an odd thing to say. This morning, we did have oh, that's kind of odd. Wow, the calendar just changed dramatically. Okay, we had initial claims this morning. Came in at 218,000 versus 220. We do have ECB's lane at 10:30. We have Fed's Barkin at 12:05 p.m. Fed's Barkin spoke at 8:30 Eastern. It was about a half hour ago. We do have a 30-year bond auction. You want to pay attention to that one. There's also the crop report at 12 p.m. today for those who are trading grains and or ags. The crop report at 12 p.m. The U.S. reports is 15 and 30-year mortgage rates. We'll see if those are trending down or up. And then Japan reports on three-month bills and 5-year auction, JGB auction. And that's really pretty much it. The market this morning, the S&P specifically, that's really bright. The S&P specifically is in a multi-distribution profile. And the volume is is relatively light. It really was a quiet session. This is a concern, of course, coming into today. The inventory is 97% short. So we have an inventory imbalance, and the range is awful, 12.5 points. To me, all of this comes together, and it basically says that we need to lower our expectations today or trade something else, which is what I've been advocating lately. Trade something else. The S&P under these types of conditions isn't the greatest trade in the world. How does that make you feel that I say that? Does that bother you that I'm saying that? Here's the S&P currently. You can see it's a multi-distribution profile, double distribution. Basically, we traded. There's a line in the sand here that was starting to form at 50.10. We fell below it. We in an impulse, and then what we did is we consolidated retest. So this is a spike retest reversal. Those of you who are in the accelerator program today are going to learn about this pattern and setup. And we're moving to the upper distribution. How does it look farther back? This is what we did yesterday. We opened, we pushed down, we squeezed up, we pushed down again, and then we impulsed up, and then we just kind of squeezed higher. We had a push, pullback, retest, fail. However, yesterday, once we crossed the 5,000, what happened? We never gave that up. The only setup that was available yesterday was right there. It was right here. Structured setup. Why is this blue? ¿Por qué? I am actually not feeling so awesome. And I've been here since 3 a.m. 3:30 a.m. Actually, I lied. Right there. And for this setup, you're gunning for the IB stat. It's remaining above 5,000, and it happened right here. And then from there, it just kind of dribbled sideways. The important thing about yesterday is it closed at the initial balance high. It settled at 50.15 and a quarter. It's just not letting go of those higher prices. So this is likely to continue to squeeze higher. I mean, it's not finding those sellers. So at some point, we're going to either want to see it push and we get a real move down where the auction gets shifted lower, below 5,000, starting to explore lower, or we just continue to move higher. The market will continue to trade higher, until it finds the opposing force. That's the whole idea behind the auction. That's the point. I could refer you to, if you don't believe that that's how the market works, I refer you to the 2002 through 2006 housing market. I refer you to the 2020 pandemic through 2020, late 2022 automobile market. I refer you to cattle auction videos. Go watch a cattle auction video on YouTube. You'll notice that the market, generally cattle comes in, the cow comes in, and a heifer comes in, and it's described this many pounds, this age, whatever. And then the bidding, the auctioneer starts at a bid. And whatever, I don't know what they cost, $600, let's say, $600, and they're speaking very fast, and then they basically say, and nobody's interested because they think this particular heifer is too thin, probably doesn't have many producing years left, probably doesn't make a good steak, or whatever the reason is. And they basically go $595, $595, $595, $595, $595, $85, $585, $580. And they'll continue to reduce those prices until somebody ushers that they want to buy, they want to bid that price. The price is down at $550 from a 600 opening print. That's your opening swing low. And then everybody's like, well, dang, I'm not going to get that price at $540 or $500. So I better jump in while prices are still low. So it starts at $550, who's for $555, $555, $560, $560, $570. And then what it does is it crosses the open, and now it's bid up at $620, $630, $640, $650, $660. And then no paddles go up. Nobody ushers or does that thing with their finger because they're subtle. They flick their finger and the auctioneer somehow sees it. At $660, that's your top. And it sells at $660. And that's where the auction ends. But if at $660, a whole bunch of other cattle owners can come in and flood the show with their cattle at $660 because they don't think they're going to get higher prices, what will happen is the price will start to turn down. And that's what the market is doing constantly. It's not about moving averages. It's not about fancy charts or order flow or whatever. The market's just seeking the extremes of price so that it can find a way to trade in the middle, and that's its goal, is to find prices. So The S&P, as it stands right now, has not found its highs. Okay, that's the whole point behind the cattle thing. I'm basically trying to take you away from being caught up in the math and the numbers and the flickering colors on your screen, and think of the market as the thing that it is, which is an auction. The S&P has not auctioned away from its high prices. You see that? It's just holding on to these high prices. Prices are not high enough yet to motivate sellers to take profits or for the market to price in lower prices. Okay, and so that's what that looks like. We still have a gap zone below us from Tuesday to Wednesday. That's pretty weak structure below, so on any turn lower, we're looking for it to go back and retest this gap zone right here at 77. Other than that, I'm going to tell you that the S&P is very uninteresting right now. Unless you're swing long, it's not a good day trade, okay? That's just my honest assessment. Here's what the TPO chart looks like. Let's bring this back because that's a breakout day. We're not going to count that as part of our composite, okay? Any push lower, if it does find an excess or if it finds sellers and it pushes lower, any push lower is going to target the MC point of control. So you want to record or keep in mind this price down here at 49.67. The market is likely to push until it gets back to balance right here at 67, which was well established in these inside 3 days here. The first indications of it failing is it gives up to 5,000. So unless it gives up to 5,000, I have zero interest in this thing. Like, it's just, I'm not going to sit here and grind out new highs, holding on to positions and just sitting and waiting. That's not, hey, more power to you if that's how you trade. That's just not how I trade. Unfortunately, I grew up during an era of fast returns. And lower risk, I should say, rather than an era of being algorithmic or something and holding on for the swing. That's just not how I trade. Okay, the NQ has really pretty structures, really pretty. Why? Because it made this excess on Tuesday. It tested up. It put in a higher low. Okay, so it's one time framing higher still. It put in this higher low and then created this beautiful excess. This is rejection. And by the end of the session, it started to try to fill some of it, but mainly it rested in the acceptance zone below, which is what we expect. This is a legitimate B-shaped profile. This is long liquidation. And then the next day it comes in and it opens right at the prior day's high, checks the excess, and moves higher. So when the NASDAQ takes out this 18 area, we have a very clean target to the bottom of the excess and then back to the MC point of control, which is right down here at 640 or so. Still seeing 18K. Remember from last week, I talked about, hey, the NASDAQ is really gunning for 18K, but the NQ seems to have a difficult time lifting the market. It really has a hard time when it's pushing higher. I'm seeing cracks in the foundation in the NASDAQ. So let's look at this here for a minute. We have, yesterday we had the opening print right here. This is yesterday's session at 5 p.m. on Tuesday afternoon, my time. That's Wednesday's session. Okay, I know that's confusing, but that's how it works. Wednesday session. You could see the zero print for Delta is the opening print. And here it's complying, right? We cross above the opening print, Delta goes positive. So that's really good. But then there's pretty good separation. Excuse me one second.
But then there's pretty good separation between the opening print and where we end up on the open. But the delta is okay. Now, the market runs even further away. So now we are 210 or 200, 110, 210 points away, but the delta is only at 4,000. Where is all this lifting when it pulls back? So as soon as it pulls back, delta drops, right? So as you can see here, as we are holding on to these higher prices, we don't get a delta that's lifting persistently. It's falling off. It's falling off. There's no real persistent aggressor on the buy side given where we are. So to me, this is very likely to happen, right? So here overnight we pushed into the 62.50. That's the high, and you can see these big collisions. And what these collisions are offers, standing offers, or offers that are hidden. As the market pushes up and it's lifting the offer, somebody is offering out in an iceberg, or I wasn't here, I can replay it, but I don't have the time right now. Or those offers were resting and the market came in and just collided with them. And this is a very strong indication to me that especially if they collide and they fall off, especially on a weak retest, which we see right here. So this is a spike, retest, and fall. And then you can see the NASDAQ, boom, blows a hole right through the positive delta that we held. But the positive delta for the entire session versus the last overnight session, which was right here, 3,000, the positive delta for the entire session is at 600 or so. We're still not giving up those prices from the prior session. We're still holding on to these higher prices. Oops, sorry about these. But there's just no aggressor participation here. It just seems to be having a hard time. It's holding on. So the sellers are not coming in and squeezing. It's holding on to these higher prices. But my point is we don't see aggressor behavior. And what we would want to see on a rally is, you remember that battering ram, right? We're at the line, the enemy line. They have a big barrier, and what the market likes to do is it likes to pull back and bam, pull back and bam, break through, hold that area, move their back line a little bit further, and then pull back and batter and pull back and batter. Those are your aggressor buyers. And then price is the distance, the force with which that ram is breaking price. That's your delta. That's volume. Price is the yardage that's being gained up the field. Just imagine it that way. But if we're gaining yardage and we're not really ramming, what this means is sellers are just allowing prices to come up, but they're not coming in and pushing back. Okay? And so to me, when it gets high enough, what you'll have is a whole bunch of sellers stepping in and just slamming on it because it is floating up. It's not being lifted up very well. That's what the delta is telling us. I know I'm getting into a lot of detail today, but I want to make sure you understand the mechanics of how this thing is operating. There's nothing here that's telling me that sellers are in control or are getting in control. I'm not seeing any excesses at the high. We had a chance at that on Tuesday. I got excited about that, but nothing happened with it. We ended up pushing a little bit, coming back and finishing above value. There's nothing here that tells me that I should be looking to the short side. Okay, so that's that. Crude remains a really cool trade. Let me get rid of this. I'm doing a lot of teaching, so I've got all these boxes everywhere. Crude is doing a great job. Remember, crude we talked about very, very likely when we were here with a double TPO high on this day. We talked about how this was on Monday or Tuesday or Monday. we talked Tuesday about, hey, look out. This thing is likely to push back into last Thursday's big sell-off. And it's likely to push through into the 75s. Well, guess what? We got that 75 just now with the open. So we opened down here at 74 and 74. We pushed to 75.14. It's getting the job done. The big area to watch out for here is the 75.50 and the 76. The 76 puts us in the upper distribution. So what we're doing is we look to be auctioning and repairing this structure in between, this kind of dribbly area in between. Crude has been a much better trade. I will caution you, as always, trading futures has substantial risk of loss, and trading crude is very risky because it's a fundamental and it's a physically settled product. It has certain characteristics. It trades around the clock, around the globe. So make sure you're trading that on the MCL, right? So if you're using Edge Pro X, just right click on cross trade, use the crude chart as it is because that's where the good data is, but then execute your trades on the MCL. That's what I recommend you do. This way, it's $1 a tick and it's financially settled, okay? All right. I'll leave you with that. Good luck today. I don't have any plans to share with you. Crude, I did. Crude has a gap this morning. I want to see if the gap if there's an attempt to be responsive towards the gap or not. So far, it is not looking responsive. It's looking initiative. I want to see it push through the opening swing low down here at 62. If it does not, then shorts are off the table. We're looking for pullbacks to references to get long, and that's all there is. Good luck. Hopefully you gain something today. I'll catch you tomorrow morning. Take care.